Right side. Cool. Okay, right. So yeah, this is Germany DAX. So what to do is start off with, and what you can all do, depending on what charts you want to have a look at, is we just start with the just put that there. Start with it like a monthly. So whatever you want to look at, you always want to say what's the trend. So if the trend is up, then obviously you want to trade with the trend. So you can see here, price come over. We've got pullbacks, but each pullback is going up. So the first thing will be you can start doing is literally just to get an idea of the trend. So you say on the monthly, where's the trend going? So if the trend is up, then you know that all of your trades, you want to be buying with the trade, you want to go with the trade. So you don't want to be looking to sell if the overall trend in the market is up. So I'll just talk you through, literally, you can find the trend. First thing to do, number one, is find the trend. Is the trend up or down? Or is it sideways? Now, the first thing I'd look at with this is, we've identified the trend is up. Look at all the indicators. We've got positive RSI, positive awesome oscillator. So the trend on DAX is actually up. If you look at that last candle, that candle represents a time frame. So that's a monthly time frame. And if you look at that, tomorrow is the last day of the month before December. So at the moment, as it stands, the candle is very bullish. So we want to see where that's going to end tomorrow. So tomorrow's a really important day for all the markets. The next observation that I would make is, whilst that trend is going up, when we start coming into a daily time frame, I want to start looking at where the resistance areas are. So using obviously the tools here, that's the all-time high. Again, we can start looking at previous resistances before the market sold off. So you can see here, this was a double top, and then the market had a huge pullback. When it got over this level, price got over, but then had a big sell back. So we know that automatically we've got two huge resistance areas. And again, we can put those in. So we can put them here. This was the right shoulder. So you'll notice there was a head and shoulder pattern before the breakdown. So we can put those in here as well. And then we'll do the opposite. So we'll start looking for some shorts where the supports were. There's the most recent huge area of support when it bounced. And then we can come across, say, well, where else has the market bounced from? These areas offered some support before it then fell away. So you start seeing then on the daily, where are you? So monthly, we're bullish. Weekly, we're bullish. But then you start looking at these areas. And for me, like I say, when I'm charting, if I'm buying, I want to buy low and I want to sell high. So at the moment, we could be about to break out to complete new all-time highs on DAX. But the problem is, do you want to be buying at the top? I've got a nice clean chart. So we've got the moving average 9 is there. And you'll see that it's in an uptrend. The moving average 9 will hold. So again, each time it had this huge shoot up there. Price never really sold off. That was on the vaccine news, if you remember, from a couple of weeks ago. Then it's moved sideways, which gives the moving average time to come up. And then if I zoom in, you will see these candles indicate, obviously, buyers coming in. Big strong green candle there, sideways. And so far, we have a big, strong green candle there. So if I put this level in here, the triangle, so I'll just remove that for you as well, just so you can see. This line becomes valid as a trend line because you've had a top here, you've had a sell-off, and this held resistance. That candle on Friday, not only has it had a strong bounce off the moving average 9, but it's actually broken above that descending trend line. So then we look at our indicators and we say, well, we've got rising awesome oscillator there. So this is on the daily again. So you've got rising awesome oscillator. There's no divergence there. RSI, you can argue that, yes, there is divergence beginning to form. So you can see that. So if I switch to this chart just to show you the gap, we've got this gap on DAX, which is really around there. This level didn't quite hit it. So you can see, is this going to be a false breakout? This is what I'm going to be looking at on DAX. Is this going to be a false breakout? Create the divergence, and then we'll look to sell. When I scroll out, you will see that there's longer term divergence. So if this was the top of a move here, price is clearly going up. and the RSI and awesome oscillator haven't made a new all-time high. So again, we've got the divergence, but right now it's getting very, very close. This is a daily time frame, but in my opinion, it needs to close that gap minimum. When we look at the US markets, the US markets have obviously made new all-time highs. DAX hasn't. I'm struggling to see a sell signal on DAX, even though we know it's going to be close. Price is above the moving average 9. Whilst you have got divergence longer term, shorter term RSI, not awesome oscillator, you haven't. So what we want to do is, now we know that we're getting towards the top, it's probably too early to start shorting, but then we can start zooming back in, you know, on the smaller time frames. So hourly 4 at the start of this move, the peak of this, we can say, well, yes, we've got awesome oscillator divergence. And again, from the peak of this move, we've got RSI. So again, we've got divergence coming in very, very soon. Well, divergence is here actually. On the hourly 4, divergence is in. So we're looking at a sell signal, but on the daily it isn't. So again, there's a question mark on DAX now, whether it's too early to sell for the drop back. Look at the way these candles closed. So you had sideways consolidation, but then we've had green candles coming back above. So a lot of people in the market, if you looked at that IG, was 68% of traders were short. The market isn't going to drop when the mass market is short. It doesn't mean I want to go long on DAX. This is why DAX is so difficult. If you look from the 9th of November, I'll start putting in a range. You know, there's a question mark actually probably that it's broken out and gone above, but do you want to go long on DAX when you've effectively from the lows? Look, again, if you look at the all-time high is here, 13.8. The most recent low is at 8, so it's nearly a 6,000 pip range, and we're 500 pips off the previous peak. So this is why DAX is really tricky at the moment, because there's lots of signals to say you want to sell the market, but there's also enough upside that, you know, having a 500 pip, they could potentially go to new all-time high. So having a 5,000 pip move, if you want to start shorting the DAX now for a swing trade, you've got to have a wide margin. There's no signal. Price is above the moving average. What I'm looking at, don't really want to do predictions, but I would be looking at, if I then do want to get in, I would ideally see something like this. The price comes above, holds, but we have obviously this huge divergence. I would want to see something like this. Price comes above, kills all the shorts. Mass market is 68% short. What you want to do is see that change now to mass market long. When the mass market get long, what you probably do is see market come out. It'll kill all the stops. Anybody short from these levels has probably got a stop loss above the all-time high, because what a lot of traders would do is think that would invalidate, you know, potential sell. But what I've seen many, many times comes just above, either to the gap film or just above, and then we get a pullback of some sort. So again, on DAX, that's how I would chart the DAX at the moment. We can start looking at, apart from previous supports, obviously if that breaks, we'll come here. We can start looking at joining the trend lines here. So what you'll find is, if this is a true breakout, which we might well have, it will come back and clear up any mess, you know, any stuck positions, which could be down here, also close gaps. So again, if we go back to this chart, it will highlight where the gaps are on the daily. So I will show you this one, because everybody's looking at these gaps right now. Everybody's looking and saying, before it needs to get filled, it's got to come to these levels, and that's not true. You can see how close it is to this gap up here. It's 200 pips from the top gap. So again, what you could see, even if it doesn't make a new all-time high, it could probably do one of these things and then come back again. We can put this in and look for a setup there. So that would not surprise me at all. So, you know, at the moment, if we go back to it for daily, we've got RSI divergence, awesome oscillator divergence. So we know there's a big move coming. At a shorter term, hourly 4 and hourly 1, it can go slightly higher. So we will look for a sell on DAX, but I think we just need to be careful when everybody else is trying to sell the market. We don't want to be there. So that's how I would look at it. When we do get a confirmed pullback and price comes below the moving average 9, we can obviously put a fib retracement to measure potential pullback. Bizarrely, when you do this, you can almost reverse engineer it, because you can say, you know, when we go to a smaller time frame, let me go on to a smaller time frame here. There's an argument, obviously, whether this is a wave. This can project where we think it could go. So you could have a wave 1 here, wave 2 back. Sub wave 3 goes to the 161 area. So again, we can have a 1, 2, wait, sub 3, sub 4. This would then be a 3, a big 3, which makes sense because that was a spike with the vaccine news. You can have a wave 4 here. If that is true, I'll just fix this screen, lock this chart in. Not price here. We're looking to predict the move up. So we'd have a wave 1 here, wave 2, sub 3, sub 4, 3, wave 4. Wave 5 as a chart pattern can be an ending diagonal of some sort. You know, we need to keep open-minded, but there's a potential for that to happen. So we start looking at where that could go to, and we look for the apex as a potential target, which again fits in with the gap fill. So up there, you can see it would tie nicely with the gap fill. Once you've got that, we can predict a wave 3. If you watch the videos, is a 1.13 between 2 and 3, then target the 1.13 to 1.272. If I put the level there, you'll see that again it gives us this target. So it'd make perfect sense for price to come up to these levels. I'm not sure when, but you can see again this is highlighted beautifully with that huge, which again you would need, huge awesome oscillator divergence. So again, we're calling this the 3, this the 4. And between wave 3 being the highest awesome oscillator level, and obviously RSI as well, which is the highest, wave 5 would then be weaker, creating the divergence. You can say that this would then arguably be your sell area. So there's no rush to sell. Everybody's selling. You see 68% of traders going to sell. By the time it gets here, it's probably taking their stop loss and all their money, and then it will drop. So that's probably what we're looking at on DAX. No rush to jump in until price breaks below the moving average 9. We're getting close to a sell, but I would say, you know, it'd be really interesting actually if tomorrow the market is really strong at the beginning of the day and then it drops. What you'll do is you'll start creating that wick on the monthly, because if we go back to the monthly chart, that is not a sell candle right now. Let me just put these settings back so I can show you. Again, I'll clear this all off. Can you see that candle? Before you get a sell on DAX, let's look at what happened before the market sold. Sold here, you got big wick. Sold there, wick. Sold here, wick, wick. You're always getting a wick on the monthly before you see any decent sell-off. Right now, we don't have that. What you want to see ideally is tomorrow is a strong day. A strong day on the monthly, and then it gets weaker in the afternoon. That would then create a wick on the monthly. It would also create a wick on the weekly, which there isn't yet. The last two well, actually, this whole area, if I scroll there, this whole area here, when I look at it, look at all the indecision candlesticks, look at all the wicks from above. It breaks above, you get that mini wick there, but then it's immediately followed by a red with a wick above. Right now, that weekly hasn't really got a wick, sorry, the weekly or the monthly. So what we want to see is some kind of gap up, create a wick from above, pricing comes back down, and we've got a sell. So I'm going to move on from DAX, but any questions, obviously keep them for the end and we'll cover them. This is Dow Jones, actually. This is one of the ones I looked at from earlier. So I was having a play around. We've got this huge, this is called Megaphone chart pattern. Again, it's almost too obvious. People are looking at that. There's no suggestion. I'm not saying that market's price going to come all down here. The two things I'm looking at right now, again, we'll start from the highest RSI of the most recent move. So that is the peak of the RSI. Price has been grinding higher. But look, and again, can you see the wicks forming on the weekly candles? We've got awesome oscillator that hasn't really got a huge divergence. But on the weekly, we've made some new all-time highs and we haven't really had a pullback. So again, what I want to see here, scroll back into the daily, is holding the moving average 9. But on here, if we have a look, zoom in on the awesome oscillator, then all of a sudden on the daily, we've got it. So what we might see is a decent pullback, not anything like last March, but we should be looking at a pullback. Again, if I show you, come across here, extend that out, extend that up, you could see if it touched above here and it came up with huge resistance there, came down, then it's going to be an interesting area to sell. Again, what I'm looking at is on the Fibonacci. We're calling this the wave 3, and the reason why I think that is because awesome oscillator is the highest. So if that is a wave 3, what we can start doing is looking again at chart patterns, and there's a potential that that was in play. What happens quite often if it is a rising wedge, don't always like rising wedges, but if it is an ending diagonal, you see a breakdown to the lower end before price then comes back up. And can you see the ranges getting narrow? We can also put this trend line in here. Can take this one out, and you'll start seeing we're getting, a really tight apex coming. So the level at the top there is, let's put a price point on it. Price label. See if I can zoom out. I might have to change this a second. 30,522. So that's going to be the level that we want to keep a look at on for Dow Jones. Again, we've got, if you think about the top of the move, a wave 3 awesome oscillator, we've got that. We've got the divergence. We've got the RSI as well. So if I just delete that one out, you'll see, look at that. It's huge. But again, people are shorting Wall Street, and it keeps going up. Price is above the moving average 9, so the trend is still up. But what the divergence is telling us is we're at danger levels. All the markets should be in sync. If there's going to be an unexpected drop and there's some excuse, all the markets should be in sync. So what we're thinking about is DAX isn't quite there. From the last chart we just looked at, DAX isn't quite there, but we know it's going to be very, very soon. Again, if you want to go long the market, you want to, I prefer buying to sell in the markets, but at the right levels. If you think, do you want to buy up here when you've had this huge move? And that's not for me. Again, when the market does confirm is dropping, we can put a fib in and we'll be looking at, 61.8 to 90 again. This I see there was as a key area, actually. You can see there were loads of probably sellers, market dropped, price came up, probably people selling. So again, when we eventually do get it, that'll be one of the targets that we'll look for. But I think it's running out of steam. The awesome oscillator confirms it's running out of steam. RSI confirms running out of steam. So we'll be looking to sell Dow Jones, but at the right level. Moving on, this is an interesting chart now for Nazda. So again, it's huge. It's massively bullish, hugely powerful. It's been going up the whole time. What we've got is a symmetrical triangle. And then what you look for is where it breaks out. It's a chart pattern. Where does it break out? Now it's actually broken above. It came back down and it's continued up. So Nasdaq does not, if you compare the charts, DAX, Wall Street and S&P, it's its own monster, its own beast. It just keeps on going up. It's obviously driven by all of the FANG stocks, so all the tech stocks. So it's completely separate. You can't compare it to Wall Street and S&P. But using our tools again, we haven't really had divergence yet. Awesome. So this has got room to run. So again, we're here. So you could say it looks like it, but again, if I put the mark up here as the all-time high, it hasn't made a new all-time high from this point. So there won't be divergence until this high is taken out. Now, whether this is a drop of 1, even though it's out of sync on wave counts with the rest of the charts, what you could have, and it's not saying it's happening, but this is one thing to watch out for. Get my Elliott waves. There's a danger that this was a move down and then we've had this. So whether that could be a wave 2 of some sort back up, or whether it's just continuation. I would have thought that we would have a stronger move. Because the other option is this isn't an ABC. If that was a 1 and an ABC up for 2 and then 3 down, the other option is it goes 1, 2, and then we're in a big wave 3 here. Okay, if we're in a big wave 3, then you would expect us to be very, very bullish and awesome oscillator to be getting a lot stronger than what it is. So it could still be, but Nasdaq has clearly broken out of a symmetrical triangle. So I wouldn't be looking at short signal on that unless we get the close below the moving average 9. The only way I would look to short this, and it's not my, I wouldn't be a fan of doing that. If we put the triangle back in, the only way you could potentially see a setup for sell, I mean, you could use it, same setup to buy arguably, but you would want to see the price come below the moving average 9, then it would need to come back up. And the moving average 9 would need to act as resistance. You would then sell against that moving average 9 for a drop. But at the moment, you know, there's nothing to suggest that. You can see it broke out, red candles, but that's really holding the pullback. And then look, we've had 2 gap ups. That's not really bearish. You can see the 2 gaps. That's quite bullish. What that's showing you is there's a lot of buying pressure. So keep an eye on that. S&P. I haven't changed this. This is from last week. Again, this is using the wolf wave theory. So where you have the 3 points at the bottom, 2 at the top, join it up and you get the 0.6. And this was the high at the moment, 3675. If I zoom back out, we've got again similar. It's a megaphone chart pattern. So it comes, you know, something like that. You can play around with it. Because you could argue that's an undershoot and then you've got an overshoot. But again, I'm watching S&P. There's clearly, again, divergence. So you've got awesome oscillator divergence. You've got RSI. That's on the daily. But if we scroll in on the hourly 4, you know, you could be looking at, for chart setup, there's a case whether that was it. Let's remove all that for you. So just joining these trend lines, you can see how there was support. So this was a support trend line because it bounced 1, came back 2, came back. Have a look at these wicks. Each time it hit that line, there were wicks, come down, again, come back up. But as soon as it came back up, you've got red candles that then brought it down. This is really interesting, couple of candlesticks. Then again, it came above, hit that trend line. You've got red candles. Pricing come above the moving average 9, but these candlesticks are not strong. You've got a big wick there. You've got a wick above here, indecision candle. This candle, whilst it came down, bounced off the moving average 9. You then had a you know, red candle. The next candle is then, it's not quite a full doji, but it's probably an indecision candle at best. This is the hourly 4 for S&P. So again, if we're looking at here, we've not got pure divergence because price hasn't taken out the start of the RSI there. So again, if I put to get the divergence, it would need to come above. But S&P, if the, you know, that it's not strong at the moment, and there's every chance. You normally get a back test. When you've had a chart pattern breakout, you normally get a back test, especially when triangles come. So there's every chance that before it gets bullish again, it comes up and does that. You can't say it's bearish right now because price is above moving average 9. But again, it's another main market, which is caution. It's quite giddy, I guess, if you look at where it's come from. If you could call this area correction area, but then from here to there, you're talking a 13% gain in the market. And it hasn't really had a huge pullback or decent correction. You could argue it's had a really nice correction here, and that's where it's come from. But again, we have to be cautious at these levels. Again, just put that in there. As things start getting tightened up, you could either put a chart there, trend line, sorry, there, or we can go again. We could put one there, and then all of a sudden you start saying, well, you know, whilst it's not bearish, I'll take this one out, for example. We've got a really tight range. And again, what I said in the last chart as well, I can't remember if it was Nazda or US, but when you get a rising wedge breakdown or triangle breakdown or breakout, it normally comes back. So here you could say it needs to go to the apex. So the apex is always one of the main target areas we look for. You could say that could be the apex 3702, current price 3640. So it's not massively far away. So let's have a look. We are talking, yeah, it's 2% away. So that could be done in a day. S&P could go up 2% a day, not a problem. Take that off. You can see now that we've got this massive range. And timing of these chart patterns doesn't mean it has to go to that level at that time. Quite often it will do, but it doesn't have to. It could always have what we call like an overshoot here, and it gets to that level before it drops. So again, we want to watch this. Another signal you could have, because technically it can break out both sides. If you want to go long, you wait for the breakout above, pull back, and then we go. If it breaks down, use a moving average 9, but you can see comes back, and then you sell that back test. So you don't chase the move. Chasers die first. You never chase it. You wait for the back test. But again, using our signals, even on the hourly form, you've got a huge divergence coming in. If it can just make that final high, and again, it would make sense if you had that final high, hit the target price area, and you've got the RSI making the divergence, or some oscillator making divergence, you know, then it would be ideal. So in an ideal world, what we're saying is, so far DAX, Wall Street, Nasdaq, S&P, if it can just go above those levels here, then we have divergence then in all the markets. So a lot of people have been calling for obviously another big sell the last couple of weeks, but you better to wait till we get all of our rules met, and then we would be much stronger. Just have a look at the FTSE. So FTSE is a kind of breaks the rules here. So, and it has underperformed for a long time, the FTSE, but we obviously had the big sell, which all the markets did at the beginning of the year. It's then came up, it's had a consolidation, and now it's broken to the upside. I think the target is going to be this level here. But if I show you using the fib expansion tool, we put the 0 at the bottom. First point is at the first move top. Second point comes here. Really, the minimum target is 100%. It should do 100 to 161. But it's funny how that target is literally perfect, lined up there. So again, how could this play out? If we think the markets are looking top heavy, and in the next couple of weeks, we would like to see a pullback of some sort. Obviously, you've got Brexit unresolved. That could be a nice excuse. In an ideal world, I would want it to come back, test it, and then go. But the danger is it just goes straight up. But ideally, if we can get a pullback of some sort, using our Fibonacci tools again, we do. Let me delete that one. It's the wrong one. Using our rules that we have, we can do. Where do we put that? Again, exactly the same as DAX. Wave 1, wave 2. So the first pullback. Look for. Well, it might, to be honest, it might even be there. You've got that slingshot that we talk about, which is the 423. If I put the target, that's always the first target. You got a 261 and a 422. Can you see that? Lovely. It's hit that, and now so that could be resistance for a pullback now. If I work it through quickly with you, 161 could be here. Move that up. It's a bit more messy. There could be the 3 there, 4. And this could be in the final 5th. So that's like what we're looking at. Most of the markets, you know, they can change around, zoom into a smaller time frame to see them. But again, if we agree this is a 3, 1, 2, 3, or you know, this is the final moves of a potential 5th. We can start. Well, we'll wait for the MA9 as well to break, but we can start considering where targets, where it might pull back to. Again, it looks beautiful. It can be 61.8. Can in extreme circumstances could just stall at 50, but it's higher probability. And if I show you that as well, it's interesting how the chart pattern, it can go slightly up, as we said, it could go slightly up with the other markets. But for a chart pattern on the FTSE, we think this is the overall target, 7242. But after such a strong move, to get there, we want to see a wave 1, a wave 2, and then a wave 3, wave 4, wave 5 going up. If it, as we discussed a minute ago, it should normally check the chart, come back to the chart pattern. This was consolidation. We use once we've got confirmation the market's falling, because again, we've got this huge divergence, probably wave 3. We're probably in the 5th wave up. We'll look to tighten with our chart pattern, look to tighten with our Fibonacci. If we can start entering around these levels, and feel free to do screenshots, but we'll post these in the Slack group anyway. We'll do a buy. So we'll be looking to buy this. And like I say, it's a safer option on FTSE, despite Brexit and all the rest of it, just to talk about some excuses with Brexit. If Brexit happened and the markets didn't like it, one of the things that could happen, you'll see both FTSE and the currency, the British pound, drop in value. That could be short-lived. And if it is, because it could be a buying opportunity, so everybody panics and freaks out, sells their shares, and that could be a buying opportunity. So if we see the FTSE drop next week, then we want to remember this chart, and we want to be looking at these levels, which tie in for various reasons as a potential buy. If we can then buy that, then obviously, you know, that is our target. So the potential move, even if we go with the least, so even if we say it was here and it goes here, you know, it's got huge potential. That's FTSE. There's, you know, again, don't like predictions, but this is chart patterns do play out. If this does play out, it's 24% move from here, 1,400 pips. So it could be really, really good. Just show you where the VIX is, because generally what happens, this is a volatility index or implied volatility. As market goes up, generally, it's not given, but most of the time, you will see the market, especially US market, sell. At the moment, just putting these levels in, these are key short-term levels. The VIX is really, really getting beaten up here, but it should be finding support. So again, when we look at how key this area, again, you can imagine if you think about it inversely to the US markets, we want the US markets to go up. So what you would want to see is VIX ideally seen calm and down, because that's when buyers are going to come in and they're going to drop the market. They're going to drop the market when everybody's buying the stock market because it can't seem like it can go down. So to do that, if it looks calm and there's no volatility, buyers will step in and buy. So what I would love to see, I mean, it could just bounce from here. I mean, target 1, to be fair, but, you know, at these previous highs. But even if it drops down, we want to tie that in with the markets. US markets going that slight bit higher, volatility down, and bang, and you go. You can trade that. You can trade it through options. We'll have a look at the markets for gold and metals. This is chart. I created this a year ago, and it hasn't. I've not changed anything. We had this triangle breakout. Gold is a really strong uptrend. This is a weekly chart, and again, just show you the chart patterns. So you had the beautiful triangle. You had awesome oscillator diverging with price. The price is getting weaker. Awesome oscillator stronger. Once you've got that breakout, price breaks out, comes back, and you see it retests. So everybody starts buying the breakout, chasing the move. Price comes down, and then it goes up. So you always wait for the retest. You know, you have to wait for that, otherwise you can get caught. I'm just going to have a quick look as well on Bitcoin. Again, we had our weekly chart. This didn't change either, but you had the same thing with the awesome oscillator. If I show you the targets that we had, are obviously the previous peaks. So we hit that peak, well, these peaks sold, come back. Again, exactly the same. Price breaks out of the triangle. People start buying the breakout, and then they get burnt because it sells down, and then price rallies. So you wait for the breakout, retest, buy. Bitcoin's interesting because right now it went straight through this area and there's tested the all-time high. Bitcoin long term, I think we're bullish because what I see this as was a huge wave 1 up. Then I see this as a big ABC wave 2 up. This was a wave 1 of wave 3. This is wave 2 of wave 3, and we're in a wave 3 of wave 3. And if I put that here, wave 3 should go to at least 1618 of wave 2. So again, this is a wave 1 of 3 up here, 2 of 3, 3 of 3. So it should go to at least this level before a wave 4 of 3, or this could be a sub 3, and then it goes even higher. So Bitcoin is strong, you know, it's volatile. So I think this week, if I scroll into hourly 4, you know, this was a big sell, come down. And I think it was probably 20-25% drop. So people freak out again. All people talk about with Bitcoin is the big crash, which happened, you know, way back. People get burnt, and that's exactly what they want. If you start seeing this move's done, probably you've got awesome oscillator. It's gone positive as well. Just use this for some of our timings. And again, it should still go up. What I suspect is, you know, hit those minimum targets, 1618, 20,500. to the 178 extension. That could be a sub 3 of the main 3. But we're probably in the way through a Bitcoin. So I've been buying it for ages and I keep buying. The next one is on crypto is Ripple, so XRP. Just to give you a bit of an overview on this one. We had this triangle and a huge move. Just to give you some context of the move last week. Well, let's say the 20th. So really clear trend on that moving average 9. You see these red candles, people telling people to sell there, and there was no need, there was no close below the moving average 9. And then it shot. So from the 20th of November, look at that for percentage gain, ridiculous. That was up to the 24th. So I think it was the Friday to the Tuesday, and it was just awesome. It's huge money to make on these. Obviously, a lot of people say they're risky, but again, what we did, just show you this pattern as well, and everyone's saying crypto's like dead, and that was like a final move. Just to show you that triangle. So price come down within the triangle, broke above. What we want to see is how this today, where that's going to go. This moving average 9 currently it is below that, but again, if you look long term on it, it's best could potentially be A, B, C, 2, come down for the 3 or the wave C, and we could go explosive then. The question is, if I put a Fibonacci in again from that breakout, or from the lows, really, let's do it from the lows. It should be somewhere there, but again, we know in a strong move, it can stall at 50. So there's 50 and there's 61. So far it's come below them. There's 2 options, I think, here. A, it can just take off and just run. B, it could come down to this trend line, then go up. Or C, we could have an A, a B, and a C down, and then go up. But either way, for me, it's long term. But I've been buying XRP and I'm still holding. Some people sold it for, but again, if we use our theory, everything that we use, you'll see just how powerful things are. So we had this big move down, from here, and then it's just been sideways. So that breakout, 100-odd%, it's nothing. The potential on it is absolutely ridiculous. If I put the horizontal ray, so it always looks for the previous peak or previous wick. That's when you'll close. So again, look at this move. This goes back to September 18. It's not a coincidence that it hit level then and it's rejected so far. It's not a, it's all in the price. You look back at price action, it'll tell you the next level. This is in USD, so cents that is. But then you can see on my screen, you can do British pounds as well, in case you're on Coinbase or such like, and where you want to get in. But there's the next level. If this level breaks, you can look at it was $78. Sorry, so that's 78 cents. Next one would be 96 cents. I'll just show you up here with the previous all-time high. It's $3.30. So you're talking 5-fold, to where it is at the moment, which is, obviously, nearly 6, 7. But if we look Bitcoin, if we just go back to Bitcoin quickly, you can see they want to test that. That's basically a marker. That's a test. Price runs away, then they want to offload their positions. That's a test. So if we go back to XRP and you say, where's the potential? You can see that it's all the way up there. It's absolutely insane. Another level you can put in is 121. So that's like doubling it. You'll see this whole period of congestion on the weekly. We're now starting to get a move on the awesome oscillator. So I'll zoom in. Can you see that? It's the awesome oscillator. It's really strong, really positive. You've got some green candles, so it's good. It's exciting stuff there. So that's the main cryptos. Loads of cryptos which you can get into and have a look at, but there's some of the sort of key levels which we're looking at the moment and definitely worth having a look. So I'm going to stop the video now, and then I will carry on with the obviously group for questions and answers and see what we have in there. We'll go through that.